All right. Welcome back, everybody. My name's Austin. Multi-billionaire Paul Tudor Jones just bought Bitcoin. Well, actually, he announced that he bought Bitcoin a few days ago, but he just went on CNBC this morning and talked about why. And the reason this is such a big deal is because not only is Paul a multi-billionaire, not only is he around the 131st richest person in the world, but the key is how did he make his money? By managing capital and investing that capital in winning investments. And now he has made a very public statement saying that he sees a future for Bitcoin. As of this morning, Paul is going public. Listen to his why. Listen to why he likes Bitcoin.
For a long time, you were a skeptic of Bitcoin and some cryptocurrencies, but you recently appear to have changed your mind about that. What happened?
Well, COVID happened and the great monetary inflation happened, and that made me begin to think about how do you want to be positioned in your portfolio going forward. So that's really what tripped my interest in Bitcoin. And you have to realize, if you just think about, say, Bitcoin versus cash, right? When I think of stores of value, I think of it four ways: purchasing power, trustworthiness, liquidity, and portability. That's kind of the categories I put it in. So when it comes to trustworthiness, Bitcoin's 11 years old. There's very little trust in it. We're watching the birthing of a store of value, and whether that succeeds or not, only time will tell. What I do know is that every day that goes by and Bitcoin survives, the trust in it will go up. If you take cash, on the other hand, and you think about it from a purchasing power standpoint, if you own cash in the world today, you know your central bank has an avowed goal of depreciating its value 2% per year. So you have, in essence, a wasting asset in your hands. So Bitcoin, I think it's a great speculation. I've got something between 1 and I think just over 1% of my assets in Bitcoin. Maybe it's almost 2. That seems like the right number right now. It's not, for me, it's not the greatest. It's not the great cure for all the monetary ills, et cetera. It's a great speculation. That's what I would say Bitcoin is.
Wow. Great perspective. I'm going to subscribe. I'm going to hit the bell notification. I want to stay up to date. I want to stay informed. And basically, the two main reasons he said is Bitcoin is trustless and there's a hard capped fixed supply. And with all this uncertainty going around right now, having a decentralized, non-sovereign asset is valuable, as opposed to cash. For example, if you hold cash, that is a wasting asset. Now, what's interesting is what Paul said next, and before I play you the rest of this clip, the ripple effect this caused having a multi-billion-dollar traditional investor choose Bitcoin as a winning horse was massive. Even China took notice on Bitcoin. At least top state-owned TV broadcasters took notice of Bitcoin because of Paul. Breaking news, a Chinese state-owned broadcaster, the media, just published an article Sunday about Bitcoin's upcoming halving. A strange move for a country whose media has been so intent on bashing Bitcoin. The article, by China Central Television, a state-owned television network in China, spoke of the skyrocketing price of Bitcoin ahead of the halving, so that price pump we just saw, and pointed out that legendary hedge fund manager Paul Tudor Jones had proclaimed to his investors the benefits of cryptocurrency. Now, Paul specifically said Bitcoin, and the Chinese media noticed. So let's finish this clip, because in this post-COVID reality, these digital companies that don't need to worry about social distancing as much, they're recovering first. So what does Paul Tudor Jones think of Bitcoin as the world gets only more digital?
Paul, do you see this, though, in relation, and I'm thinking about tech stocks now, because one of the things we have seen even over the past 2 months is just the move towards virtual. Anything that can be done virtually has had great success, whether it be Zoom or any of the big tech companies in the Valley, because we're all able to do that virtually. Is that the way you see Bitcoin? And separately, do you own gold? I was going to ask at the same time.
I have assets in gold also. I think gold can go substantially higher. And yes, the digitization of the world clearly benefits Bitcoin. I mean, we wouldn't even be talking about Bitcoin if we weren't seeing first cousins like Venmo and a variety of other ways. My children don't even carry cash. They barely even know what cash is. So we're clearly digitizing the global economies. You've seen some countries do it explicitly, like India. You're seeing other countries on the way to do it, like China. So we're getting in an increasingly digitized world, and Bitcoin will be that much more accessible by that universe of people that could own it as a store of value. When you think about every bull market, every single bull market has one common thread, an ever-expanding universe of people who own it. So there's probably, the estimates are between 55 and 70 million people own Bitcoin. We really, if you're buying Bitcoin, your bet is that number's going to go to 120 million or to 200 million. And it's kind of hard when you look around and you see that the world's becoming increasingly digitized, not to think that the preponderance of evidence at this point in time doesn't point in that direction. But again, when I think of Bitcoin, I look at it as one tiny part of a portfolio. It may end up being the best performer of all of them. I kind of think it might be, but I'm very conservative. I'm going to keep a tiny percent of my assets in it, and that's it. It has not stood the test of time, for instance, the way that gold has, which has been a store of value for 2,500 years.
Wow. This should make you feel good. In the 2020s, in this decade that we're in these next 10 years, I don't think Tudor Investment Corporation, this hedge fund, they're not going to be the last to say it's irresponsible of us not to speculate at least 1% to 2% on Bitcoin. I have a question. Since we have a few hours, a few minutes until the 2020 Bitcoin halving, this sell-off that we saw a few days ago, this huge red candle, maybe that was the miners selling since their profit, their reward per block is about to get cut in half. What do you think? I think that's a little off. I think Bitcoin miners sell BTC months after the halving, at least the on-chain data suggests. Blockchain data shared by on-chain data analysis firm CryptoQuant shows that miners are not keen on selling their newly minted Bitcoin ahead of the halving, at least based on the data, and using the Miners Position Index, NPI, CryptoQuant found that over the last 3 months, what we just saw, miners have been avoiding selling. Now, again, what was the last 3 months? Right around here. But let's look at the data. The Miners Position Index, NPI. An NPI reading of anything above 2 suggests that miners are selling their BTC after mining, while a negative value shows that they're avoiding selling as much as possible in favor of accumulation. So here's the chart of Miners Position Index from 2018, 2019, 2020. Anything above 2 shows that miners have started to sell what they have mined. Anything in the negatives below 0 shows that miners are accumulating. As shown on the chart above, the NPI was slightly above 0 at the end of last year, December 2019, and it began to drop in January. By February, the reading had hit negative 0.5. And again, anything below 0, below this number right here, and the orange is the MPI, Miners Position Index, and the black is the price. Anything 0, miners are accumulating. So notice, since November, December of last year, 2019, miners haven't been selling. Really, the last time miners took some profit was in June, July of 2019. Last time miners took profit was right around here. I get it. Bitcoin was around 14,000. Data shows that in the first and second halving, miners did not sell their funds right away. So today, miners probably aren't selling right now. Ahead of the halving, the MPI was below 0, and as the price increased over the next 6-12 months, so did the NPI. When the NPI reading surpassed 2 just a few months after those prior halvings, the price crashed, meaning that's when the miners were selling. So any price action we see in the next 2-3 months probably has to do a lot with traders. The miners will be selling 6, 12, 24 months later because they're betting that the price will increase. All right, that's the video for today. My name's Austin. Happy halving, everybody. Bitcoin's third halving ever. Aaron and I will be going live for at least a little bit. See you then, or see you tomorrow.